Dear friends, welcome to Weekly View on Markets. As I'm traveling during this week, I'm doing this video from my car. I hope it will be useful to you. Nifty pulled back from the support level during this week in the first 3 days. And on the later part of the week, that is on Thursday and Friday, again Nifty saw profit booking and closed marginally lower, lost about 0.23%. But other indices like Bank Nifty, Nifty Mid Cap, and Nifty Small Cap indices gained during this week. There was outperformance in the broader market and they continued their gains. By looking at the charts, I feel that market may consolidate for a few more days. But looking at the fundamentals of the economy and the markets, I do not expect any big correction from the present levels. Let us look at the performance of indices during this week. Nifty closed at 19,265 with a loss of 45 points, that is 0.23%. Bank Nifty gained around 380 points, closed at 44,231, gained about 0.87%. Nifty Mid Cap Index gained about 655 points, closed with a gain of 1.73%, closed at 38,471. It is touching the highest levels for the mid cap index. Similarly, small cap index also touched 12,000 levels. That is a historical high, and then saw a little profit booking, closed at 11,683, gained about 187 points. That is 1.59%. India VIX is at 12.08, and it is more or less steady at that level. Now let us look at sectoral performances for the week. Private banks gained during this week. They closed with a gain of 1.59%. Information technology continued to gain and gained about 1%. Financial services gained about 0.87%. Media stocks gained about 0.64%. Realty sector gained about 0.52%. PSU banks saw profit booking after 2-3 weeks of gain. They saw profit booking in this week, lost about 1.58%. Pharma sector was gaining for last 3 to 4 weeks, and this week we have seen profit booking. It lost about 1.61%. Healthcare sector similarly lost about 1.25%. Oil and gas sector lost about 1.34%. Energy sector lost about 1.22%. Remaining all sectors were more or less consolidating. Now let us look at technical charts. This is the daily chart of Nifty. As we can see here, the Nifty has closed at the support level of 19,300. It slightly dropped below that, but it is still at the broader support level. And from here, I expect Nifty to pull back. In case Nifty falls from these levels, the Nifty may touch 18,800. 18,800 is the next immediate support for the Nifty. This is a chart of Nifty Mid Cap Index. As we can see, Nifty Mid Cap Index is making higher tops, higher bottoms, and these two red candles on Thursday and Friday should not be a worry because the chart pattern is making higher tops, higher bottom, and doesn't show any weakness. At the most, we may see some consolidation on the Nifty mid cap sector. This is the chart of Nifty small cap index. The small cap index had touched the historical level of 12,000 during this week. This is the previous all-time high touched, and maybe after a few days of consolidation, Nifty small cap index is likely to go to higher levels. This is the chart of Bank Nifty index. As we have seen last week, I expected Bank Nifty index to bounce back from the support level, and it has bounced back. And on Thursday and Friday, we have seen again a sharp correction from 45,000 level. I had set a target of 45,000 in the previous week. Almost that target was achieved, and after that, we have seen a small correction. The 43,500 to 600 level still remains a good support level for Bank Nifty. If Bank Nifty comes near the support level, traders can look at buying it for a target of 44,500 to 45,000 levels. Now let us look at some of the economic and market fundamentals. Macroeconomic fundamentals of Indian economy continues to remain strong. RBI dollar reserves is at $594.89 billion by the end of this week. It has dropped by around $7 billion. Rupee has breached 83 levels during the week, and RBI may have intervened in the forex market, and they must have sold dollars to stabilize the rupee. That is why I see a drop of $7 billion in the forex reserves. And accordingly, if we look at rupee dollar rate, it has dropped from 83.2 levels to 82.64 levels for the week. Dollar index has gone up. It is at 104.19. The dollar index going up globally is the reason for rupee to weaken beyond 83 levels during last week. Gold prices have gone up and is at 60,520 for 10 grams 24 carat. Crude price after touching a high of around $87 per barrel has dropped back to 84.83 per barrel. The drop in crude price is a welcome move for the Indian economy. So it will help in bringing down inflation. And if the crude price comes below 80, that will be good for our economy. And if the inflation comes down, the markets will also tend to move higher. FIIs have sold 4,895 crore in equity markets, whereas DIIs have bought around 8,496 crores during this week in equity market. Defense and aerospace stocks rallied during this week on successful moon mission of Chandrayaan by India. Food and Civil Supply Department of Government of India has come out with a report, and in that report they have told that food inflation is likely to fall in coming 2 months, and the fall in food inflation will definitely help in bringing down the inflation. In the meanwhile, the bond yields of 10-year G sector, that is the benchmark bond yields, have gone up, indicating that the interest rates are likely to remain high as inflation figures for the month of July has come at higher levels. Stock market is facing stiff resistance at higher levels. Whenever the market goes to higher levels, we see profit booking, and market comes down. This is due to the higher valuation of the market because of the sharp run up in last 3 months market levels. And also inflation is a big concern for the Indian markets. We may not see sharp correction because our macroeconomic factors continue to remain good. So we may not see sharp correction from the present level, but also the upside limit is capped due to premium valuations. So this gives me an idea that market may consolidate for some more time. If there is any dip due to sudden global developments and global news, that provides a excellent opportunity for investors to pick up good quality stocks. And also people can use these dips to invest in good mutual funds, and SIP investors should not get worried, they should continue their SIPs. So long term investing helps investors to make good returns from the stock markets. Investors should not get worried about short term volatility and remain invested for longer period of time. This is all for this week. If you like my video, please share with your friends. You can ask your questions, which I will reply. You can subscribe to my channel. See you again next week. Thank you.